Hey guys, we're live, and there's so much to talk about this week. Last week we were on live, and while we were live, the market actually went down, and people were very surprised by this. This was like a new thing that happened in markets where the market actually went down. I know it's crazy, but it does. And then gold just kind of continued its rally, just going up every single day. Kashop just informed me that gold was actually going down, and I was like, "Are you serious? I didn't know it does that anymore." I mean, what are we at? 9 straight up weeks at this point. It's pretty wild, and that's it's what you want to do as a trader is you want to catch these moves because they're going to happen at certain points. However, you don't want to get too wed to the idea that these things are going to go up forever and it's going to be great forever. We're all going to make all the money in the world and we're all going to retire next week. It's not it. And even if you want to retire, it sounds to me it's a ridiculous thing. I don't even want to retire. I like what I do. But at the same time, looking at Wavy, are you saying you caught it live? You caught us when we actually got on for once? You didn't miss it? Didn't have to kick the girl out of bed? Yep, Wavy said he's here from the beginning. So Wavy's had some funny comments on here with me. It's been hilarious. Always appreciate you coming on, Wavy. But yeah, when we look at this market, it's just kind of showing you the direction everything's moving. We're moving into metals, we're moving into materials, we're moving into cyclicals. I posted a chart the other week from Goldman talking about cyclicals outperforming the Mag 7 at a large rate very quickly. And now we're looking at platinum's leading the way, palladium's right behind it, silver's right behind it, gold right behind that. I mean, it's a precious metals rally. So I think it's a rally that you have to continue to be on the side of what's working and doing less of what's not working. And really that's kind of the way you want to trade most of the time. Yes, you want to look at what's next. Yes, you want to prepare for that. But you also don't want to get too wed to the idea that, hey, I'm going to rotate out of these really great things and buy these things down here in the red. And these things in the red are going to end up like this at some point. It's not usually how it works. How it works and how we've been playing it is we look at something like gold starts to move. Then we look at something like the miners. We start with the larger names. We move down the cap scale to smaller names, juniors, explorers, and so on. And then we start to see these other metals start to move. Then platinum really caught up in, I want to say, a week. It was like the leading year to date in futures in a week, which is wild. At a huge move. I think it was like 40% in a couple weeks. And then you had palladium, next one that caught all the way up. That was lagging all year long. Then that caught up. So we've been in the precious metal space. We've been in the metal space quite a bit. Moving for me, I'm moving more into the copper miners at the moment, and so on. And I think it's going to just kind of continue through these commodities. So, Kashop, anything that's sticking out to you from last week, this week that you want to talk about?
The parabolas. So I think we should talk about the parabolic moves. And I know you have always said that you hate the term parabolic moves, and even I'm not that fond of it, but looking at all these big moves across the space, and it's not just precious metals, it's not just technology, it's not just crypto, it's like everywhere. So there's a nuclear stock that's gone parabolic. So everywhere you look, there are these names that have gone parabolic, and by parabolic, I mean parabolic on the daily chart. I don't really care about the Harley or the 1 minute candles, all this stuff. I don't even look at it, but the parabolic moves on the daily chart, and some of them starting to go parabolic on the weekly. So now this is a little concerning because in general I like to just ride the uptrend and do nothing, but then when you get these big moves, so you and I, we have talked about this before, and I think this is probably a good time to bring it up again. So there's the Jason way of following an uptrend, and there's the Tom Basso way of following an uptrend. And I know you're going to talk about your method, which I totally agree with. The other method is when you see parabolic moves, you have to take or trim a little off, because if you don't, then the daily volatility is going to kill you. Now, at that point, so you write the futures. So for you, it's different. I write the stocks. So what I look at when I look at these parabolic trends in single stocks is I have a whole portfolio of stocks. Let's say I have 25 stocks. Am I going to take one or two trades off because the trend has gone parabolic? Yes, absolutely. And that's something that I did today. The report is out for subscribers. So I booked a 260% gain on a winner, which I started buying last July. So that's what I'm doing with the gold parabolic move. So, Jason, how would you be riding this parabolic move? Are you going to do anything? Are you going to trim? Are you going to just be okay with the volatility? Let's talk about your style here.
Yes. So I will just let this thing move. Volatility for me is it's going to go up over time, but this is how I think about it in the portfolio. If you want big returns, like if you want normal returns, and like let's say you're Tom Basso, you've made you've made all the money you possibly probably can, or at least want to. Like I'm sure Tom could still be out there running his fund to this day. But he's always been the guy who's very happy with what he has, and he's made a lot of money over the years. So if you're in that scenario where you're just, hey, I'm running a fund, my whole goal is to be low volatility, make sure my clients are happy, because really that's really the truth about why all these funds became low volatility funds. They became low volatility funds because clients couldn't handle the volatility. And then now when everybody goes, oh my God, hedge funds are so terrible, look at their terrible returns. It's not because of them being terrible. It's because of the clients want lower returns. Like, yes, you might see a 5 to 10% return in a fund for futures for some low volatility fund. However, their drawdowns might be something like you're looking at 5% drawdowns total for a full year. Granted, you're never going to make crazy amounts of money like that, but also your clients will keep shoveling money into your fund, and you'll keep making more fees, and you'll make a lot more money that way than being a guy like me, like, hey, I make great returns, but clients can't handle, which is really small drawdowns these days. I get phone calls when we have a 10% drawdown. I get phone calls when we get a 20% drawdown. Like it's the end of the world. And really, it's like, that's really what happened to the whole hedge fund space. And now it's just a low return, low volatility, because what happens is the big banks also want that too. So they're not going to hire a guy like me who's putting together big returns and go, oh, great, you have really high returns. It's awesome. They're going to go, okay, there's risk here. Clients will be bugging us, annoying, with us. So we'd rather have somebody who's just putting together some low returns. And that's where vol targeting really comes in. And this is why it's become really prevalent in trading. Now, when you have something that is really moving, especially in futures, which is, you have leverage, you're sitting on this leverage, let's say gold moves 50%, you might be looking at 250% of a gain on your initial capital. This can turn to a huge, huge amount of volatility in your portfolio. However, if you're sized right from the beginning, to me, this is the most important part. If you're sized at a 1% stop as you're in this uptrend, so basically if you have a $100,000 portfolio, you're only going to lose $1,000. And then, it moves all the way, let's say at 2x's, 3x's, and now you're moving to 5% volatility in your total portfolio. To me, that's not the end of the world. You're basically playing with house money at that point. So if you're playing with house money at that point, yes, it's real money. You always want to think of it as real money, but at the same time, this is money that was a trade that just worked out, and this could be the next outlier trade. You want to just hang on to that thing. And so for me, being in something like gold or gold miners, using leverage on a lot of these products, I'm very happy to just kind of sit and go, okay, well, maybe my volatility towards year end will be higher. And this is an important part because I restart this every year. So my volatility at the beginning of the year is 1% to each position. So this is getting technical. So sorry if this is boring you guys, but let me know, but we can move on if you want to. But I think this is the most important part of trading. But if you have a 1% stop at the beginning of the year for all positions, so you're losing $1,000 in a $100,000 portfolio per position. Let's say you let that ride for the year. Then we grind up to, and this is really the truth of how I put together these good returns every year, is I let this compound to get to a 20 or 30% return. When it gets to that level, I go, okay, am I doing something so right that's making a ton of money, or is the market environment perfect for my methodology at the moment? If the answer is the market environment is perfect for my methodology at the moment, I will start to step up size. Meaning instead of maybe 1% to a stop, 2% to a stop. And these positions that have compounded, that's fine. Just let them run. So now that's how I put together really good returns. So it's more like I have this buffer, most likely worst case scenario, you go back to a 20 or 30% return for the year, which isn't the worst thing in the world, but you shoot for those superior returns and I took this strategy from Trader Vic, by basically adding leverage going into those last few quarters or last couple quarters into the year. So for me, I let it run. Things that move are parabolic. Those are the outlier trades. That's what I want, or more than anything in the world, is I want those outlier trades. My strategy does not work very well in range-bound markets. It doesn't work very well if things are just chopping around. So I really try to leverage into things when I'm making good money, when the market is moving the direction that, not that it should, but the direction that I think it should. So the market is proving me right. It's proving my systems and strategies right. So then I can step up size, make up more money, let those other ones compound, and I don't really care where the volatility goes in those, if that makes sense.
Yeah, no, that totally makes sense, and that's why, I wanted you to get your perspective out today to our viewers, because everyone's talking about the parabolas. Everyone's talking about it started with a melt up, ended with kind of a parabola, then a scare. Now is just so much volatility on either side. Like gold was up to start the day, and now it's down. And same with silver, it had another up day, and then now it's like down 5% or something. And stocks, the S&P, Nasdaq, they all had a nasty down move during pre-market, and now it's like up for the day. So it's like we are seeing wild swings everywhere, and that's really where the vol targeting, the volatility management, or just letting it ride. So all these philosophies, that's when it comes into play. Like we talk about trading, like, hey, buy this, sell that, this is a breakout, you buy this and all that. But then at the portfolio level, what really matters is, can you stomach the volatility? Now, if I trade it the way Jason does, I don't know if I can stomach the volatility. And if Jason, had to follow my portfolio and he's like, I'm going to cut this winner here, even though it's not really gone down, he might not like it. But then our individual styles, it suits us. And, as a trader, you really have to figure out what kind of trader you are. Are you the kind of trader who can say, I'm going to just ride this to a 10x? Doesn't matter if I take a 30% drawdown along the way, even if it's range bound for a long time, I don't mind. I'm just going to keep riding the trend. Are you going to be the kind of person who says, you know what, there are no dearth of ideas, I'm just going to move over to the next idea? You really have to know what kind of trader you are, because normal markets, or markets where, where everything is just going up every day, you don't really have to think about these things. But then on days like today, when you have to act, if you're not ready to act and you freeze, that's when you get into trouble. So as a trader, it's important to have a style, and it's important to have that style fit your personality. Now, Jason's found his, I have found mine, and of course, we trade totally different markets as well. So that's a factor. And if I was trading with leverage, I don't know how I would be trading. And if he was trading individual stocks, I don't know how he would be looking at it. But if you're getting both our perspectives, I think you can kind of figure out what would fit your personality. Now, looking at this chart, year-to-date performance, so we see Coco kind of at the bottom, and Coco was one of the best performers for a really, really long time. So what's changed, Jason? Why is it that we had this nasty move down in Coco? As the farming situation improved? Is the crop production up? Or is it just we had a wild move up, we have a nasty drawdown, and there's nothing more to it?
Yeah, you if you go and look at Coco, and you see, like, there was all these there's an interesting paper I wrote a while ago called the Cocoa Wars, basically talking about fighting over that area. There was a lot of issues at the time that made cocoa rise to the levels that it did. Supply issues, demand, not even demand problems, or it was more of trying to get it to specific places became an issue. Trying to get it out of Africa became an issue at certain points. So we were running into all these little issues that just continued to come up at that point. that kind of drove the price higher, and then people just kind of got into it. Next thing you know, it's just going, up every single day. Cocoa, I mean, they was having 10%, 12% up days. It was wild. So I think it just got ahead of itself. Similar with orange juice, it got ahead of itself. A lot of these things got ahead of itself. So I'd say like that's the main thing to think about when you're looking at all of these at the bottom, which is cocoa, orange juice. They had their runs during a time where everybody said commodities were dead. That would be 2023. Orange juice was one of the best performers, as well as cocoa started to be a really good performer in 2023. And so we saw the softs already kind of make their move. Coffee joined the party right after that. I think that was at the end of the year in 2023. Then coffee started making a big move. It was 100%, 120%, 150%. It's still been going up there now. So coffee's been another one that did move back then, but is still moving. But I think that money's just kind of flowing from sector to sector in the commodity space. Somebody asked, is gold topping? I don't know. Like that's the real truth of, nobody's going to say that. Most people want to say, yes, this is the reason why gold is topping. This is the reason why gold is not topping. I will tell you for me, and then I'll get Kashop's perspective because he'll have a great perspective on this as well. When gold is up and moving and something is trending, I don't ever want to call a top. I'd love to. I think human nature makes me want to say it's a top and hop in there and short it even, and to be super right. But as time has moved on, like I don't do that anymore. Like I look at the market and I go, this is trending up. I want to be involved in the uptrend. Would I buy it today? No. Have I been in the trade for a long time? I'll hang on to the trade, and that's the way I'm going to do it. And I'm going to add exposure to that sector as we go on in things like palladium, silver, gold. I think silver still has more to go. I think the gold miners are saying they still have more to go, which would make it surprising for me to see gold stop here. Slow down? Yes. I think it's time for it to slow down a little bit and some of these other commodities to catch up to it. But really, that's all wishful thinking. Right now, the trend is up. Yes, it's volatile. Yes, you're going to have a lot of shakeouts, breakouts, and so on. It's going to be messy. But I think at the end of the day, you want to just stay long something like gold until it really tells you it's time to get out of this trend. It's not saying that just yet.
So the way I would look at it is, if you're buying gold right now, gold futures or as a trading vehicle, this is not the right time. And the reason it's not the right time is not just that it's gone parabolic. The reason is that if you look at how these gold futures contracts work, so every time there's a huge spike or this kind of a big move in a short span of time, the margin requirements go up. So once the margin requirements go up, naturally the open interest in these products comes down. When that happens, you kind of tend to get a choppy period where you have low returns or no returns, or it goes straight down. So in this scenario, you want to wait to see what the CME is doing, what's happening in the actual market for delivery. So like for silver, we saw that the lease rate for silver went up to 39%, and the SLV ETF, the lending rate, the borrow rate for shorting silver, that went to 12%. So when you see moves like this, you kind of know that something's happening. And if that short interest or the margin requirements, any of those change, then the volatility of the product changes. Now, all of these are very short term. So, if you're buying it thinking I'm going to hold it for 2 years, it doesn't really matter. But if you're trading it, then you have to be aware of, yeah, the chart shows a parabola and all that stuff, and that's true. But you also have to be aware of the dynamics of these contracts and the fundamentals behind the moves of the exchange, the moves in the LBMA, those markets. So you need to be aware of all these things. And with that in mind, I would say gold is probably topping out, but that is not a call saying the bull market is over. It just means we are due for a correction, and that correction could be either in terms of price or time. So if it's in terms of price, then that's really the easiest thing to trade, because you just add or you average, because I look at it as a savings vehicle. I get to average in, or If you're looking at it in terms of time, then great, you have more paychecks to deploy towards it because one fine day it's going to go higher. So either way you look at it, I wouldn't add now. I would wait for the correction, which takes place either in terms of price or time, and use that as an opportunity to add. I would not say that you should short gold futures right now because it's a very risky trade. Yes, you could absolutely nail it, but it's a very risky trade.
Yeah, when we look at that market too, and if you guys go to my Twitter page, Jason P138, I think it's on my handle on my name. Can't see it right now. Nope, it isn't. So Jason P138 on Twitter. So if you guys go to my page, I just wrote a whole paper on the silver squeeze situation. Gold also looks very similar to that. It is interesting. Have you, Kashop, did you see any of the pictures? I just saw this morning. I should have actually brought a slide of it. But it was like a picture of a bunch of people in Vietnam getting gold. Did you see that?
I didn't see that, but I saw the Bullion Star pic of people lined up in Singapore trying to buy
Yeah.
gold. Yeah,
It's crazy. I mean
yeah,
that's the mania that we would expect. Like this is the thing that people have asked us this whole time, which is when is gold going to top? And that we've been waiting for some sort of mania, and that we haven't seen at all. In the United States, we're still not seeing it. Like, I hit up my buddies at the gold stores asking them about anything. Nothing. It's still dead. Nobody's coming in there selling gold. Nobody's coming in there to buy gold. It's just about like normal, which blows my mind. But then if you look overseas, it looks totally different. People are starting to run to gold. And it could be many reasons. It was on a show the other day. Somebody asked, is gold money? And I was like, yes, gold is absolutely money. It's been money for a long time. And they were like, well, the end of the world could happen. And then everybody, like all of you guys want to, talk about the end of the world and all this stuff. And I'm like, I'm not saying any of that. I am saying that gold is money. And that in times of global strife, global turmoil, people do run to gold. I mean, this just happened. What was that? Ethiopia happened. Weimar Republic happened in a bunch of places over the last, 100, 200 years. So it does happen where people end up running back to gold. Might have got the country wrong. Can't remember exactly which country it is. I'm sure Kashop does. Which country was it? The recent one that had everybody had to run to gold.
Zimbabwe, they sort of backed
Zimbabwe.
their new
Yeah.
currency with gold. Yeah.
Mhm.
And Ghana, I think it was Ghana which said that they're going to buy all the output from the gold mines in the country. So they did that.
And then a couple of people said things are crazy in India. Paris said things are crazy in India for silver, 15 to 20% premiums. That's true.
Yeah, so the ETF in India, they halted creation of new shares because they couldn't source physical silver from the market to back the ETF units. So silver shot up to a 10% premium. I'm sure it's at 15-20% now. I haven't followed it that closely. It's getting crazy. And even with gold, so gold has become so unaffordable that Indians typically wear 22 karat gold. 24 karat is a pure investment gold. Indian women, the jewelry they make, that's 22 karat, so that's mixed with a little bit of copper. So it's like 91.6% gold and the rest is copper. So now what they are doing, the jewelry stores, knowing that, it's become impossible to buy jewelry, they have dropped down to 14 karat and 12 karat, which is crazy. Never would have imagined that situation in India because uh, 22 karat itself, like you can tell the difference between 24 karat and 22. And you
Mhm.
drop down to 18, that becomes white gold. And you drop down even further, then it doesn't resemble gold at all. So pretty soon people are going to be talking about silver jewelry. But the way silver is going, I think even that's going to become an impossibility in the near future. So it's getting crazy. These moves are getting crazy. And as much as we talk about the charts and the trading angle, I think there's a whole other angle to it, which is this is the season, this is the Diwali season, the wedding season where people buy a lot of gold and it's going to get quite difficult. So I don't know what's going to happen, but I'm pretty sure, there were these memes that we see on Twitter and Facebook, the United States throws gold bars across the border and China throws the paper dollar bills across the border. So I think it's kind of going to get to that point where everyone is just going to have a mad scramble for gold, and there just isn't going to be enough supply to go around. So, definitely fun times ahead.
Yeah, it's definitely interesting, and I think people don't think about that aspect of it, which is currencies come and go. Like it's a simple thing that's happened in history. Currencies come and go, especially when they're not backed by anything. So I'm not saying I'm making a call for the U.S. dollar to be, gone. I'm calling that at some point it'll probably lose reserve currency status. That makes perfect sense. There's nothing crazy about saying that. However, some people will attack me all the time about it, saying, "Well, how are we going to do that?" and so on. It's just something that happens in history. Empires get too big. Read about the Roman Empire, read about Greece, read about Britain, read about just about anything in history. There's been a currency and something that's happened and some sort of debasement of that currency. And then the people lose faith in the currency and the country and the government. Next thing you know, we move off of reserve currency status. This happens, and it doesn't feel like we're like, I'm not saying like this is happening this year or even in the next 10 years. I'm saying it could happen at some point, and people will probably rush to gold again. Some people will say, well, maybe Bitcoin. It's sure anything's possible, but I will think that most people will go to what they know is going to work, what they know is not going to be volatile, what they know is going to basically protect their money at the end of the day, and something that's an easy form of exchange. Bitcoin will always be kind of a tough form of exchange at the moment. If you don't have anything to really tie it to, like the dollar, I don't know exactly how you'd buy and sell every day with it jumping around as much as it does. However, something like gold, it's tangible, it's valuable. And I'm not saying like, hey, everybody go out, get rid of all your dollars, buy gold today. I'm saying that this can happen, something to keep on people's radar. But let's move on. We've been on that one for a while. So let's talk about gold versus the S&P 500. And Kashop, you've studied the time in the 2000s quite a bit. When you look at this chart, do you think that it's a situation where we're going to see gold just continue this massive outperformance with the S&P moving up, or do you think it's going to be a situation where gold starts to just move sideways, but the S&P is kind of under pressure? How do you see this chart moving as we move forward? Now that we're kind of breaking out over those old highs that happened in 2020, we're finally getting above that zone.
So the S&P 500, it started out as a good index, diversified among the 500 largest companies in the US. And over time, what's happened is, so it's a momentum index. So over time, the winners have become larger, the losers have been kind of dropped off and replaced. So what's happened is now you have this heavy concentration of the index in just 10 or 12 names. So a bet on the S&P 500 is now a bet on the direction of these 10 or 12 names. So you don't even need to call it the S&P 500 anymore. It's a momentum asset. So gold, interestingly, has also become a momentum asset, and they're kind of starting to play catch up. One leads the other, and then the other picks up. So you're kind of in this situation where I think both go up over time, and that's mainly because uh, of monetary debasement. Because when you have rampant inflation, what do people do? They buy stocks, they buy gold, they buy all sorts of other things. So I think you're going to see both of them kind of do okay over time. But I think gold is the clear winner because the S&P has become too concentrated. Valuations have become kind of really crazy, and you could have the XLE, you could have say home builders move 100 200%, and it wouldn't really matter to the return of the S&P 500. And you could have Nvidia move 10%, and that would have a bigger impact. So it's gotten so lopsided that I think gold outperforms now. However, because the S&P is a momentum index, once these big names start to underperform, they'll get kicked out. They're going to put more winners in, and then the momentum will start to build again. So long term, both will do well. But short term, I would definitely bet on gold.
Yeah, I think it's going to be interesting to see how this shakes out with the weightings inside the S&P 500. I've been, for me, my big view over the next 10 years is looking at it one day and seeing, okay, we see materials and energy and industrials near the top. Maybe tech. I don't. we're so tech heavy in the United States. I don't think we're ever going to see the S&P 500 be, tech be a 2% weighting of the overall index. I think technology will still be a pretty big weighting, but more like 10%, let's say, 20%, where we start to see the industrials start to be the bigger names in there, getting more like, let's say 10% for all three of these. Around there, we got energy, industrials, and materials all around, 10% each. I think that would make sense. But where we're at today is getting very lopsided. And when things are that lopsided, it turns into a situation. I mean, think about this. Back in the day, General Electric, one of the biggest names in the S&P 500 or the Dow and so on. Or if you look at ExxonMobil, ExxonMobil was the biggest name in the U.S. market for many years. But these things change over time. I mean, and here's the difference in the 2000s to today. There wasn't many tech stocks that were even in the top 10 around that point. This is what's going to make this cycle very interesting, which is, these companies that did well, like Pets.com wasn't a top 10 in the S&P 500. All these that you remember from that time that were like crazy names, AOL and so on, that went up a lot and then came all the way back down quickly. They weren't top 10 in the S&P 500. There was still ExxonMobil at that time, General Electric, and so on were still the big names inside of the S&P 500. So what happens to the S&P 500 in a cycle where the market is so heavily weighted in these 7 names, are basically technology, communications, which is technology, consumer discretionary, which is also technology, biggest company in discretionary being Amazon, biggest one in communications are Facebook and Google. So as you see, those are all basically technology names. So what happens to the S&P 500 if those can't sustain at these levels, if these aren't going up? I think the S&P 500 is in a lot of trouble. I think that's a situation where we start to see it move in other areas. And I think we're seeing the international stocks really say that already, Kashop. Something to just think about, which is the international stocks, when you look at some of these, they have zero technology in them. If you look at some of these countries, they don't have any technology at all. Sure, Israel does, and some of them do, but Europe, a lot of industrials, a lot of banks. Same thing with South America. Same thing with Southeast Asia. Yes, you have a lot of technology companies in China, but also if you look around the other areas, there's mainly industrials and banking, a lot of energy. So we're just looking at a very different environment that the market's kind of telling us is happening. Like the market's kind of saying, hey, we're at a position here where, sure, we could continue in this zone and continue to be all concentrated, but people don't want that concentration anymore. People want to get out of US dollars, which we've seen in the US dollar index. People want to get into hard assets like gold, which we've seen in gold and silver, obviously. And people want to get into these international stocks and these industrials, banking, and energy names, or metals and mining names. And they're doing that as well. So I think the market's saying it clearly, like where we're at in the cycle.
Yeah, I think you're absolutely right. So, silver versus gold.
So let's get to the silver gold ratio. So, somebody brought up the other day, Sam and I were on a show, and they were like, yeah, it's the silver gold to gold ratio is still really low. And I was like, yeah, it damn sure is, but I don't know what makes it, does it have to go up so much? Does it need to get back to these levels that we saw back here in 2011? Even these levels that we saw here in 2021, 22, that would be a crazy move that we'd see in silver as well. That would probably take silver actually to about 100 right now. But this level, we're talking about silver around 250. So what do you think? Does anything have to happen now? Well, I know the answer to that is no always, but like think about it. Let's just think about it, speculate a little bit. What do you think about this ratio? Do you think it's going to go back to where it used to be, or do you think it's just kind of null and void these days?
So, my thinking on this has completely changed over, I think, the last 5 or 6 years. So, if you go back to maybe the end of the previous commodity bull market, so you would find platinum was higher than gold, gold was higher than palladium, and palladium was higher than silver. So you would expect this kind of ratio to stay constant because platinum, palladium kind of more rare than gold and so on. And what's happened has been very surprising. So gold is leading and palladium was leading over platinum. I think there was a point where palladium was 3x the price of platinum. And then platinum was absolutely slaughtered. It was just lagging behind. And then silver, of course, went nowhere. Now you have uh, the ratios completely changed. That's the point I'm trying to make. Like you had platinum leading, and now it's a laggard, and you had palladium, which was kind of sitting there doing nothing, and then it overtook platinum, and then gold overtook everything. So when you look at the price action in these commodities and these precious metals, you find that whatever we think has historically held, whatever relationships have historically held, you find that the market surprises you. So if the silver to gold ratio goes up from here, great. Maybe it gets to 60, maybe gets to 40, whatever, that's fine. If not, that's also fine. I wouldn't really pay too much attention to it, mainly because I've seen how these correlations, the impressions that we have thought will hold true for a long time, have just been upended in the current bull market.
Yeah, I think it's interesting because it changes and it shifts, and it's a for me when I look at it, I always go, okay, gold sometimes is going to be the outperformer, it's going to be the leader, and it should be. It's the safe haven. It's kind of think about it like the consumer staples of the gold space. If you really need a name for it, I don't even like that name, but I think it makes sense if you think about it. So it's the consumer staples. It's the boring. You can go to it. It's a safe haven. It's going to usually make you money. You're not going to lose a ton of money because it's not volatile, but it's not going to make you all the money in the world. And then next thing you know, you start to see you could call it consumer discretionary if you need to put it into stock terms, which is the risk on sector, which is something like silver. So silver then starts to move, starts to catch up. And as you see, gold was massively leading, and this is where Kashap and I kept getting hit up with all these conversations about uh, central banks. Central bankers are buying gold. They're not going to buy silver, Jason, you idiot. Like that kept coming to me over and over again. And, it's just the way the cycle works. It's not that I'm a genius by any means. It's just the fact that human nature is very similar most of the time in these cycles, meaning humans start to go, okay, gold's great. I'm going to buy gold, safe, doing it. And then all of a sudden they go, gold's kind of expensive here. What the hell am I doing with gold anymore? Maybe I should start buying silver. They start buying silver. Silver starts to move up. You start to see money start flowing into other areas, all based on the same thing. People kind of going, gold's pretty expensive. Not to mention the gold miners are going to start making a lot more money if they're profitable at $1,600 gold. At this point, they're getting very profitable. So it's time to start buying more and more gold miners, going down the cap scale, buying junior miners all the way to explorer stocks, which we've seen. Now silver is getting above $50. I think silver is probably going to continue here. That's going to be a hot take that a lot of people are going to say no way to because they think it's going to hit $50 and it's going to just crash down. I think it's going to break out. I think it could come back and retest or chop around or do whatever. But I think the overall structure of the market, and this is another thing, there's a bunch of different types of trading. I always talk about there's more than just technical and fundamental. I talk about leverage trading. I also talk about structural trading. I think the market structure and the underlying way that the silver market is set up right now is going to send the silver market higher. I think we're going to see some crazy move here. And it could be, this move might take to year end, but I'm still saying I think silver is going to hit up to 75 by year end. I don't think it's going to stop. I think it's going to be one of those trades that everybody's going, this has to end soon, and it's just not going to end. It's going to chop around. It's not going to just look like this the whole time. I wish it just looked like this straight up and down arrow. That'd be great. I wish my whole portfolio looked parabolic every day for the rest of my life. That'd be awesome. It's just not possible. So looking at this, I think this thing's going to, chop around, but I think the choppiness is going to just send it higher. I don't really want it to look like this the whole time because if it does, I'm pretty sure a nasty crash is going to come. So the more chopping around, the more volatility I see, the more the happier I'm going to be with holding my silver at the moment. So I brought a couple scan decks. So just wanted to go through the market, and I thought this was interesting, Kashop. So we built these a while ago. Ricardo is the guy who helps me with all this. He's really good at this stuff. And so basically I'm able to get a quick snapshot of everything in the market very quickly throughout a bunch of different scans. And so when we look at this one, what's at the top year to date? XME, 1 month XME, 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 all the way to 6 month. It's number 2 over 12 months. Speculative growth did take it out so far, but it's barely behind it at the moment. So when we look at this type of a market, like we're seeing this big move into the metals and mining space, and this is also driving like some of these countries, and I did bring country one. Some of these countries, I think Peru, Kashop, you might know this off the top of your head because you know the mining names better than me, but there's only really one stock in Peru, right? Is it Southern Copper?
BVN. Southern Copper, yeah.
Okay. So
Southern Copper, yeah.
Yeah. Oh, I was right. I got one right. Nice. All right. So Peru's really just one stock, which is a copper miner, and this is leading year to date, which is very interesting to see. But the main thing I'm trying to show here is the fact that like money is still flowing outside of the United States, pretty heavily. All of this, volatility that we're seeing in the United States, we're not seeing nearly as much volatility everywhere else. Saudi Arabia has just been chopping around, but it's up 10% compared to the S&P 500 this year, nearly 10%. It pulled back today. Peru up 11%. Granted, that's just Southern Copper, but also South Korea. South Korea has been on a tear. It might be the leading country this year, actually. I know Greece was leading, but 73% sounds like that's in first place now. But these just keep going back and forth between Korea, Poland, Greece, which we're seeing this massive exodus of money outside of the United States into these other areas. And that's the goal here. Like, I don't give a shit about, hey, you got to invest in the United States because you live in America or you love America. Number one, like I'm here to help everybody who follows me make money. That's it. I'm here to also make money completely selfishly. That's also the other thing. So as long as I'm trying to be in these areas, I don't care if it's in Mexico, Argentina, Taiwan, Vietnam, like it doesn't matter to me. Not to mention, none of us have enough money to just put into, let's say, the Vietnam ETF, and then Vietnam's going to go start a war against us because we've given them enough money. It doesn't work that way. We're traders. We're in and out of these trades. So basically my goal is to enrich, clients and their families. And, that's what we can do and what we can control. And you got to always focus on what you can control. So looking at this one, I brought this for you specifically today, Kashop, which is when we're looking at the winners to losers. So the left side is the winners, right side's the losers. Rick actually figured out a way for me to start looking at stocks more, which is funny. So this is my way of looking at stocks. But if we're looking at the left side, we're seeing all of these winners, which are, we're looking at uranium, silver, crypto, which has been basically the miners have been moving. Everything else hasn't really moved that much. Ethereum, uranium, HUD-Bay, HL, IPX. Like we're literally looking at IPX, which is a titanium one, an aerospace and defense stock. They supply them. SBSW, TMC. I could go on, but like we're looking at a lot of metals and mining in first place, and winning over the last 6 months. And the losers on the other end, we're looking at maybe a couple energy names are in here, but it's mainly like a lot of boring stuff, the staples, Coca-Cola all the way down here at the bottom, IPIs and other ones, potash. We've been talking about that, saying to stay away at the moment, but there will probably be a time to start buying that again. We've got waste management companies. We've got garbage companies. We've got, just United Health once again. So we have all of these boring stocks on the right side, which are kind of these consumer staples type of names. And then on the left side, even some communications. And on the left side, we have a lot of materials. a ton of materials actually, and a ton of uranium miners, even steel producers, and so on. So, Kashop, when you look at this, market, does it tell you this environment is changing anytime soon?
No, not at all. It's a hodgepodge of industries. Everything is going up. What it tells me is that there's a lot of liquidity, a lot of speculative capital that's just chasing one thing after the other. So I would be very, very careful because it's a lot of liquidity, and the moves that we are seeing, if you have 10-20% up days, you have to be prepared for 10-20% down days, which means that you have to start investing or buying these stocks before they start making their big move, or take a smaller position and hope to ride the move and just chase the momentum. So if you are looking for smooth trends, you're not going to get it. If you are looking for massive trends where you can make a lot of money really quickly, then looking at charts like this, looking at the relative rotation graphs, I think this is the great time for that style of trading. So I don't do that, but if you do, then this is absolutely the best market setup for that particular style that I've ever seen.
Yes, because you're basically just looking at ways to just go from one thing to the next, and just seeing what's moving. And honestly, like that's the key of relative strength to me is not that it tells the future, it just tells you what's moving. And so if you have a big macro thesis, and let's say like I do my regime model like I always do, and it goes, okay, we're in a global reflationary cycle, and I see that we're seeing all of these names, there's a lot of international names in here too. It's another thing. Coal's in here as well. So we're seeing a lot of that starting to move. And then we go, okay, that's interesting. That's really telling me that money is flowing into these areas. And then you go to the next part and you go, okay, well, which countries are doing well? Well, it's a lot of resource countries are starting to show up, especially on the 1 month time frame. So in the last month, we have a lot of these resource companies starting to really show up, really starting to show some outperformance. Africa, we got South Africa, Vietnam, Saudi Arabia being a big one. So let's pass all that. Bitcoin. So everybody wants to talk about Bitcoin. What's funny is nobody asks me much about Bitcoin anymore, Kashaf, which is fantastic and also disturbing. I don't know why, but Bitcoin. It's probably because I don't talk about any of the other coins because I really don't try to mess with anything anymore like that. Getting old, I guess. But Bitcoin here, coming back to this line. So can Bitcoin hold the line? Now you've been very not bearish on Bitcoin, but just saying like, hey, I'm out of Bitcoin. I feel like there's better trades at the moment for me. So you've been really spot on about this. Basically, since that point, I think it's just this range it's been in since you sold. So what are you seeing here in Bitcoin? Do you think that it could go, it's just going to crash down? I saw all the other coins last weekend, went down 50%, 60%, which is starting to make sense. That makes sense. So what do you think here is going on with Bitcoin? What do you think is going on with Bitcoin to year end?
So Bitcoin, I've been in the space a long time, and I finally made my exit in Q1 last year. And since then, what I've seen in the space is we had 6 months of chop. So from, let's say, March 2024 to November, it was just chop. It wasn't that it was going down, it wasn't going up either, and people were miserable. There were all these guys who were trying to short the uptrend. They were miserable because it wasn't going down. There were all these guys who bought thinking halving or whatever was the news, and they were miserable because it wasn't going up. It wasn't a get rich quick scheme. So then when momentum picked up, everyone bought in again, and then it was all rosy. Trump came in, and to the day the crypto market topped. So the most bullish, crypto bullish president in entire history, he came into power and the crypto market topped. So how do you explain that?
Totally
Well, you
normal.
explain it. Yeah, totally normal. So you had that, and then you had MicroStrategy buying, you had all these imitators, the other so-called Bitcoin treasury companies coming in, and then there was an Ethereum treasury company, a Tron treasury company. I don't know if there's a Solana treasury company now. So you had all these moves, you
Sure
had
there
all
is.
these I'm sure there is. You had all these events, and still Bitcoin really didn't catch a bit. And every time, people would tag me on posts. They would say that, "Hey, Bitcoin hit a new high. It's a new high," and it'd be like, "Yeah, it was 110K. Now it's 111K, and you're calling that a new high. Just wake me up when there's a meaningful move." So it's like you need to see at least 200, 250K Bitcoin to see that it's worth the risk. If you're just chopping around, going from 120K to 125K and saying new high, and then it goes down to 100K and then goes back to 126 and you say new high, you're not really getting paid for what the kind of risk you're taking. And the other risk that you're taking right now in Bitcoin specifically is there's a debate going on within the developer community. So there are these two node operators. So Bitcoin functions. So there's a whole lot of math and science to it. So you have to go look it up. But there are these two opposing philosophies in terms of what Bitcoin is supposed to be. Some say there should be no spam on the network. And by spam, they mean transactions where someone can input a little bit of data, which is needed to make ordinals and other bits of software which is around Bitcoin. So the entire ecosystem work. And there are others who say, let Bitcoin be pure. We will not store any data. So they're having a tug of war. And how that war shapes out is how Bitcoin will get shaped out. So you and I, we have lived through the 2017 wars where Bitcoin and Bitcoin Cash split up because they couldn't reconcile their different philosophies. So Bitcoin is going through the same thing right now. In 2017, it was you just throw a dart, you pick a crypto, you made money. So if you bought Bitcoin and you held during those fork wars, you made money on both the forks. Right now, I don't know if it will fork. I don't know if the civil war will be settled amicably, and it's kind of like a civil war. So, however it plays out, that's when you will really know what the trend is going to look like. So, if a new use case for Bitcoin comes up because one part of the community wins, then you're going to see a lot more innovation on Bitcoin. In that case, it can probably go higher purely from the actual demand for the coin by the users. If the other camp wins and says, let's just keep it the way it is, let the network get ossified, then you're going to see what happens to every mature company. So 1960s, during the data processing boom, IBM was a great company, and then it ossified. And what happened after that for the next 2, 3 decades, IBM was a terrible performer. So you're going to see something like that with Bitcoin if it becomes ossified. So overall, I would just stay away from a fundamental angle, from a technical angle, from every angle. I would just say this is not the crypto to be in. And because I have the luxury of trading across sectors, when I look at crypto, when I look at Bitcoin, the rest of the crypto space, when I look at gold and the rest of the commodity space, for me, where I want to spend my time is very clear. I don't want to be in crypto. I want to be fully in the gold space. And I've kind of been out of crypto for almost a year now, since last November. I've been out and I don't regret it at all. So, in fact, since the time I exited the space, it's been nothing but chop, nothing but misery. I've had some marginal gains, but nothing like the nice trends that we got in the commodity space. So, nothing like the good. You could buy a large cap miner and make double your money. That's
Yep.
how crazy this year has been, and you don't get that in crypto anymore. It's
No,
just not there. So you're
it's too
better
big
off
of a
sticking to
market.
the
That's the
yeah,
other thing nobody talks about right now. It's like
yeah,
it's too big of a market. Like when we were trading Bitcoin, you can remember like hearing that it hit 1 billion was big news. You know, these are big markets now. There's a lot of assets in it. It's not going to move 1,000% like people think. It's going to have normal moves now. It's going to be, it's going to probably at some point, not yet, but at some point, we're going to be looking at Bitcoin and being like, oh, it's averaging about 10% to 20% a year. That's going to be normal. That's going to be a normal CAGR for something like Bitcoin. So just be ready for it. The rest of the crypto space is very volatile and it's always followed Bitcoin. Like that's the thing. If you look at a Bitcoin chart, you look at the rest of them, it's going to follow Bitcoin. Bitcoin's going to be the safest place for you to be. It's going to be the outperformer most of the time. However, it's something that's always going to be a little bit volatile, a little bit sketchy at times. So I'm still long it. Haven't hit my stop yet. We'll see when it hits it. I'll update everybody on that as well on the channel. But at the moment, I'm hanging out long. But at the same time, I completely agree with Kashop. There's been much better trades in the portfolio. So, all right, guys, I have to run. It's great to hang out with you guys. We'll see you guys next week at 10 a.m. on Fridays, Eastern time. So, all right, we'll see you guys later.
Thanks, everyone.